Ladies and gentlemen, this is why you sometimes you just gotta watch channels like this. Okay? You have to get an actual understanding of what's going on in markets because we called this. Nvidia is up 3% following earnings. The earnings just came out. Again, the conference call could change things, but Jensen Huang's a bit of a rock star on conference calls and tends to get people pretty excited, so I doubt that's going to happen. Nvidia did not do great today in their numbers. Like, this is not like the typical Nvidia earnings. Let's get that straight. This is bad for Nvidia's standards. Okay? And a lot of people thought that this was going to be the earnings that Nvidia would get clobbered. I knew that was not going to happen. Right? Just look back the last few videos. That was obviously not going to happen. It was obvious to see, okay? Nvidia is actually going to pave the way for the markets to break out higher from here, and specifically for AI stocks to catch more of a bid. So let's look at these numbers. Nvidia's Q1 2025 earnings, adjusted EPS, 96 cents. The estimate was 93 cents. The wires today had a weird typo where it actually looked like Nvidia missed, and I do believe they did miss on bottom line EPS, but they beat on adjusted EPS. Again, something weird happened with the wires and how the numbers came out. But look at this. Revenue came in at $44.1 billion. The estimate, $43.29 billion. Okay? That is not a $2 billion beat. That is a $800 million beat. That is the smallest beat you've seen from Nvidia in years. That's not great. Now, it says adjusted gross margin here, 61%, estimate 71%. But again, another typo. It was actually 71.3%, and the estimate was 71%. So a little bit of a beat. Again, nothing spectacular. Look at this. Data center revenue, $39.1 billion. Estimate, $39.22 billion. Is this AMD? Huh? Like, when is the last time Nvidia missed on data center revenue? That makes no sense to me, right? That's not good from, just in Nvidia perspective. Compute revenue, $34.16 billion. Estimate, $35.47 billion. Huh? Nvidia missed on data center revenue and compute revenue, and the stock is up over 3%. I know some people are shocked by this. Networking revenue came in at $4.96 billion, estimate $3.45 billion. Now, Nvidia says the Q2 outlook reflects a loss in H200 revenue of $8.0 billion, was unable to ship and added $2.5 billion of H200 revenue in Q1. So Nvidia actually says, basically, you would have gotten the $2 billion beat as we typically do if it wasn't for the restrictions in the Chinese market. That's essentially what they're saying here. Now, the Q2 forecast reflects an $8 billion in lost sales to China. Sees Q2 revenue $45 billion plus or minus 2%, estimate $45.5 billion. Nvidia normally guides up like $2 billion more than estimates. Nvidia guided down today. Guided lower than analyst estimates. That has not happened in 3 years, plus or minus. Okay? That's unheard of for Nvidia standards these days. Now, Jensen Huang says that global demand for AI infrastructure is, quote, incredibly strong, and Blackwell NVL72 AI supercomputer is in full-scale production. Then again, why is Nvidia up 4.15%? Basically 4.2%. Now, Nvidia also says we expect to begin shipping Blackwell units in Q2 fiscal 2026. So, in the not so distant future, okay? Why is Nvidia up so much following their earnings when this was clearly not a good quarter for Nvidia? And they even missed like on almost every metric, right? Besides top line revenue and gross margin. It's simple yet complicated. For anyone that's been in the markets for a while, you understand this. We've actually talked about this on the channel. Honestly, I don't know the right way to put this or the right wording for this, so I'll try to explain this the simplest way that I know how to. But analysts have been so wrong in trying to forecast what Nvidia numbers are going to look like before earnings. That's why, Nvidia always just beats so much, because analysts can never get the numbers right. So what happened this quarter is analysts didn't really move their estimates down too much, but they put out a lot of notes about this is going to be a weak quarter. Even Bank of America yesterday said that Nvidia's Q2 guidance could be $41 billion. But they didn't lower price targets. They didn't change their actual penciled in expectations. They just said, hey, prepare for a bad Q2 guidance, like the current quarter. So it's kind of like, let's say Tesla, right? If something happens with the robotaxi launch, analysts are going to say, oh, this sets Tesla back 3 months or 6 months or whatever it is. But if analysts keep their price targets at $400 or $500, wherever their targets are, and they don't move their earnings estimates, they psychologically lower the bar without actually lowering the bar, right? So everyone was feeling bearish, expecting the worst heading into Nvidia earnings, that even though the numbers, it looks like Nvidia missed on some of the most important metrics, they actually did a lot better than expected psychologically, right? Forget the penciled in numbers. That didn't even really matter. As we talked about in previous videos, the bar was just low for Nvidia from that perspective. And that's why Nvidia is up about 4% right now in after hours. The earnings call could, go 50-50. Maybe, there's some good, some bad that is said. It's really hard to predict exactly what that's going to look like. But I do think, again, if there was going to be something that took Nvidia lower, it was probably going to be a weak guidance, and that did not happen. So at this point, I think it's safe to say we're past the worst of it. If we were going to have a disaster drop, probably would have happened when the numbers came out. If anything, Jensen Huang could get people pretty excited about AI demand and the AI story, in which we all knew is alive and well. Like, nobody really thought that anything was wrong with the systemic story of Nvidia, right? And that's also important to remember, as people were kind of, again, bearish heading into this quarter. Now, I do think the markets really wanted to get Nvidia earnings out the way before we rallied further from here, to get some reassurances that AI demand is strong coming from Nvidia. And that's exactly what happened. So I do think this will allow markets to move higher from here. And I do think there's going to be people that want to chase these AI stocks, that want to chase the markets. Because if a bad quarter from Nvidia didn't just wreck the markets, what's going to at this point? Like, is trade talks going to go sideways? Doesn't look like it. Looks like we're making progress there. Is the fiscal, situation going to kill markets? No. Where's the bear case? Consumers doing just fine, holding up, at least. People have jobs. This is another big potential fear catalyst that is now out of the way. That's the bottom line. And I think this continues to support my thought that we have a large year-end rally, because odds are maybe things get better from here versus, hopefully gets worse. Now, Nvidia says that they would have to foreclose from competing in the China market if obviously they are restricted from that market, which hopefully in some kind of trade deal with China, that doesn't happen. I don't think that's what will happen. I do think Nvidia will be allowed to compete in the Chinese market, which is obviously good for Nvidia, good for AI, good for American exceptionalism, right? And pushing AI forward, in which It's a big component of a lot of the companies that we invest in at this point. Let me know your thoughts specifically on Nvidia earnings. We do have some news from Trump today, from other individuals that I do want to get into. But I wanted to cover Nvidia earnings first. So let me know your thoughts on them down below in the comment section. Today, the CNN Fear and Greed Index is about right in the middle of greed, sitting at 66. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, neutral. Market volatility is neutral. Safe haven demand in extreme greed. And junk bond demand also in extreme greed. Tomorrow, we will be getting a new AI investor sentiment survey, but for the first time in about 2.5 months, we had more bulls than bears, but the bear side is still really elevated and neutral investors are still really elevated. So on Thursday of last week, you had 37.7% of investors who were bullish, 25.6% that were neutral, and 36.7% that were bearish. Okay. I imagine maybe the bears are going to rise a little bit for this Thursday's report. And again, you got to look at this as a contrarian kind of signal. The more people are bearish, the more upside there is, okay? Because markets move based on what is expected. And I think people are way too bearish right now in their expectations and really their positioning from hedge funds and institutions. Retail investors like me and you, we bought the dip during the 20%, crash we just experienced. Wall Street was selling that crash. They were selling all the way down. They were not buying any of that, okay? So here's where the chase starts as Wall Street realizes things are not nearly as bad as maybe they thought they were. Now, the percent of stocks trading above their 50-day moving average sitting at 64.55%. You're kind of in a normal range at this point. You were in the 70s, which was a little on the high side at about 72%. But again, you're back down. This is kind of a normal range between 65 and 55 for any given market. Once you start to get above like 75%, you're getting to the high side of where we have been at over the last 4 or 5 years or so. So keep that in mind. There is room for markets to move higher here. We did get the Richmond Fed Manufacturing Index today coming in line with expectations at -9. Manufacturing shipments came in at -10. Expectation was -11, so that was actually a beat. And services revenues came in at -11. The expectation was -5, so that was a miss. Dallas Fed Services Index came in at -10.1, largely in line with the estimate of -10. The FOMC minutes, came out, usually not a catalyst for markets. It's just backwards looking, so I don't really think there's anything to discuss there. Trump says that an Iran deal could happen over the next few weeks. Trump says we want to go into Iran with inspectors, and he warned Netanyahu against Iran actions. Trump says that he has a warm spot for TikTok, but he said on a TikTok deal that China is never easy and that he would need China's approval for a TikTok deal. And Trump said he didn't impose Russia sanctions because he didn't want to screw up a potential deal. Trump said on Musk's comments on the bill being just not good, he says, we will negotiate the bill. I'm not happy about all aspects of it. So he's kind of taking Elon's side here, which sounds pretty good, that it's not great. It could be improved on. Trump says we will respond differently if Putin is playing us. US CEA's Moran says the bond market will come to see lower rates coming in time. And he says that interest rates will come down over time. According to a Fed survey today, in 2024, 29% of people said the economy was good or excellent, down from 2019's 50%. That, again, there's a lot of people that are in a recession right now, that have been in a recession for really since like 2022, like the second half of 2021. When prices started to really rise. That's why I hope the no tax on tips or no tax on overtime does go through in the spending bill, even though, yes, it's going to raise the deficit, but it's going to give people a lot more money to spend in the economy, and overall, I think be a net positive for 60, 70, 80 million Americans and help push them out of a recession. And according to this same Fed survey in 2024, 63% said they could cover a $400 emergency with cash or equivalents. Little changed from 2023. That's crazy. Okay, so what? 37% of Americans cannot cover a $400 emergency expense with cash or a credit card? That is not good. And really how I look at this is there's probably a lot of room for people's financial situations to get better here. This to me, again, is unchanged from 2023, highlighting just how bad people's financial positions have been in for a long time, right? Hopefully this can get better. In 2024, 73% of Americans said they were doing okay or comfortable financially. Little changed from 2023. Now, also in the news today, positive news for trade talks with the EU. The EU agreed to speak to Greer and Lutnick every other day. So hopefully some kind of arrangement gets figured out relatively soon. And Moran on the EU says, I think they will come around. And China is welcoming more cooperation with firms, including Morgan Stanley. And China's Vice Premier He says, I welcome U.S. financial institutions and long-term capital to participate in China's capital markets. So again, I think there was a lot of good news today from trade talks, opening markets, China, the EU, the Iran stuff markets really don't care about all too much. TikTok deal, not really a big deal. But Wall Street's just waiting on Nvidia earnings. That is really the catalyst today. There's also going to be other earnings as well today and after hours to keep in mind. Salesforce, C3 AI, Elf, Nutanix, Agilent Technologies, Viva, Centennial One, Pure Storage, and Synopsys that will also be reporting earnings. So obviously, AI with Salesforce, C3 AI, AI software really, Pure Storage, Synopsys, like a lot of software specifically related to AI today. And then Nvidia, that's the big dog. Tomorrow morning, Foot Locker, Best Buy, Kohl's, Hormel Foods, Futu, Burlington, and Build-A-Bear Workshop. And then tomorrow and after hours, Marvell, Costco, Dell, Elastic, Zscaler, Ulta, Gap, American Eagle, Ambarella, and NetApp will be reporting. So still some pretty important earnings on the books. Again, Nvidia is the big one. And I think expectations are just too negative. Like, people do not have high hopes for Nvidia, specifically for what guidance is going to look like. And normally when expectations are low, there's room for an upside surprise. And that's what I think we're going to get today with Nvidia earnings. But hey, I could be wrong. Let me know your thoughts down below in the comment section. Remember, first move happens at 4:20 when the report comes out. The follow through happens on the conference call. Important to remember. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.